It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
And it's probably warranted. You do give up a little bit of power going under one of these arrangements, in that you are agreeing to sell your existing property sort of no matter what. Though at the moment we are seeing quite a bit of that bridging finance.
And that is George Payne in Brisbane this morning on the Real Estate Breakfast as we launch into another episode with more property information as we connect you to the largest real estate podcast library right across Australia every morning, 7 days a week. And you can stream us on Apple Podcasts as well as iHeartRadio. It is a Friday morning. I hope you've had a productive working week. March the 21st, and I see a report from Domain yesterday. Homeowners in sought-after areas are cashing in on major property gains, with long-term sellers in Sydney's Randwick making a median profit of $1.39 million. Willoughby and the Northern Beaches followed closely behind. They say that high demand, limited supply suburbs continue to drive long-term capital growth, which is, I guess, just proving that despite market fluctuations, blue chip locations remain strong investments around the country. However, got to say that unit sales tell a little bit of a different story, with some areas seeing significant losses for sellers. That might be something that you unfortunately have experienced. Well, let's right now catch up with George Payne from Astute Financial there in Brisbane. And good morning to you, George. Welcome to the Real Estate Breakfast. Going to be having a look a little bit from your perspective, the mortgage brokering's perspective there in Brisbane. And first off, let's take a look at those first home buyers. They're looking at the moment, I think it's fair to say, in Brisbane, just in terms of what is happening in the market, for a little bit of a discount perhaps.
Yeah, hi there. Thanks for having me on the show. Yeah, I would say that's true. Well, there was a time not long ago where we were getting first home buyers pre-approved, and they were really struggling to get something and not going under contract and having those pre-approvals expire, whereas now they seem to be able to negotiate a small discount and are happy to go ahead and are now going under contract more often.
And what is happening around general optimism in the market, even though there is this sort of cautionary feel about the market at the same time? Would you say more optimism at this moment in time?
Yeah, I would agree with that. There's general optimism, or cautiously optimistic at least. We're certainly seeing investors as well coming in and people looking to get their first investment property, and quite a bit of inquiry to that. First home buyers as well, generally agreeing that Brisbane's not getting any cheaper and they're wanting to get into the market. So yeah, I would say that there's general optimism. As to the reasons for that, I guess, yeah, the interest rate cut would play a big part, and a lot of people talk about the Olympics in Brisbane playing a part too.
And what about the first home buyers? Are they, any of them, sitting on the fence waiting for another interest rate cut or two? Or are they saying, yeah, we've got to get into the market?
I'd probably say the latter. It's probably more so that the rate cut has given people confidence that the rates aren't going the other way anymore. And it's probably less so that how much of a difference that's actually made to the repayment. Just a bit of confidence that there's a good chance that the repayments they're getting in with are going to be similar to that, at least for the next few years.
And you mentioned that the investors, they're coming back. Are they coming back from other states? What are you sort of seeing there?
The investors that we're talking to are local. We're helping people from Brisbane. Some of those investors aren't necessarily buying in Brisbane, so it's the other way around. But yeah, a lot of them are families looking to get a second place and wanting to do that now, thinking that things are going to get more expensive here and would like to lock something in at today's prices.
Yeah, so you mentioned these investors are doing the inverse. They're not investing necessarily, some of them in Brisbane. They're looking at other states. Which other areas are they looking to buy?
We found a couple of people buy in Townsville and Perth. I'm not really sure what the attraction is, but sometimes those people have got advice from buyer's agents. And I think you mentioned that on your podcast not long ago, that people were favouring the use of buyer's agents to give them advice on where to buy.
We were talking just a couple of days ago about first-home buyers. Well, it's not just first-home buyers. It's anybody that is saving for either a second or third property or a first property that is buying junk. You know, the amount of stuff that people buy, it's outside of just the lattes, the coffees and the smashed avos. Is that something that you sort of find at all, or do you find that that's probably something that's sort of a blanket right across everybody buying too much nonsensical items these days?
Yeah, I'm sure it's true to an extent, but I would say there's a good chunk of the people that we're dealing with are squirreling money away for their first place and trying to maximise that deposit and get in there, and don't appear to be too wasteful. And probably same goes for those families that are thinking about that investment too. They're probably, at least from what we see, don't appear to be too wasteful, I suppose. But I guess maybe we're just seeing that pocket of the market that are in that position to do something, so we get a different view of things.
We are talking to George, and he is in Brisbane. When we come back, want to find out, when people are upgrading, are they hanging on to their existing property or are they selling to buy a second property? We'll find the answer to that after this.
Every morning from 6 a.m, we bring you the latest real estate news with diverse perspectives from leading industry experts. We deliver the most property podcasts across Australia every week.
They say that they need nearly 200 grand a year to live comfortably. I think your average person around Australia, if they're anywhere near 100 grand, they're probably feeling pretty happy with their lot.
Yeah, it's actually really fascinating. At the end of last year, the average wage in Australia, according to ABS stats, just hit just over $100,000. And so it's been a really topical conversation recently about how much do you actually need to be comfortable or to get by on a good salary. And our data showed that the younger you are, the higher your expectations are. So Gen Z feel like you need at least $177,000 to be on a good salary, whereas the kind of baby boomers at the other end of the scale, they're closer to $126,000. So they see a much lower amount as being, you know, the necessity that they need for a good salary. But I think these findings are not altogether surprising, because Gen Z, just by the nature of their age and where they are in their life stage, they're less likely to have a mortgage or to own property or have kids. So they're looking ahead at these expenses and they're projecting. So they're probably sitting there thinking, to be on a good salary and be able to afford the life that I want in the future, I'm going to need quite a lot of money. So they're kind of basing it on their projections rather than the reality of what they're living. Whereas baby boomers, they often own their own home outright, or they are very, very close to that. And they don't have those costs of raising children and education and those types of expenses of having someone at home.
Every morning from 6 a.m. across Australia, we deliver you the latest property news, commentary and predictions from Perth to Cairns and from Melbourne to Brisbane, 7 days a week.
And it is a Real Estate Friday. We're in Brisbane this morning talking to George just before the break. I think I kind of phrased that slightly wrong. Question here for you, George. Are people upgrading? When they're upgrading, are they hanging on and buying a second property, or are they selling their existing property? What's going on around that?
Yeah, I guess that ties into that cautious optimism. And there was a time when they were very keen to hang on to that existing property, and now we're not seeing that so much there. And use as much of that equity in that existing property into the new one as possible, and keep that new mortgage as low as possible too. And maybe that's somewhat because the just the increase in value in those existing properties has been so significant, and therefore the cost to buy that next place as well is much higher.
One of the things we've talked about was towards the end of last year. In fact, we focused quite a bit on bridging finance. Now, some people look at this as a real demon in the detail. They don't want bridging finance. They steer clear of it at all cost. What is happening in Brisbane with people engaging with bridging finance? Are you seeing much of that?
Yeah, exactly. There was a time when the fear was too great, and it's probably warranted. You do give up a little bit of power going under one of these arrangements, in that you are agreeing to sell your existing properties or to no matter what. Though at the moment we are seeing quite a bit of that bridging finance. Yeah, I suppose the reasons for that is just that people are not wanting to be out of the market. They're not wanting to sell and then start looking. There's probably a fear that they're out of the market for too long and things, keep increasing in value. Maybe just also the luxury of being able to move straight into the next place and, having no gap in between. I suppose, yeah, and tying into that first point that, they're not looking to hang on to that property anymore. So they're definitely looking to get rid of it. And just the cost to buy that next place is so significant that they're not able to hang on to both without going into one of these types of arrangements.
Yeah, because we had a couple of instances that we heard about, particularly around 2021 when the FOMO effect was in full play. And there were people that were doing bridging finance and they became a little bit unstuck because I guess the greed factor kind of kicked in because some of these people were looking at 4th, 5th and 6th properties. And then it gets really, really messy.
Yeah, correct. So the concern is as well that, you're not really sure how much to spend on the next place because you're not certain what you'll get for your place. You can pay $100,000 over for the place you're buying and then realise you have to sell for $100,000 less on your place, and it's a $200,000 turnaround on the mortgage. It can have a big impact. I suppose the people that we're doing this for, they're cautious in how much they're spending on the place they're buying. So in that sense, it works for them. They've got a good buffer in what they can sell for and still be in a comfortable position once everything's done.
All right then, George, nice to find out what is happening in your corner, and thanks for coming on to the Real Estate Breakfast this morning. It is a Friday. We're heading into another weekend after the day is done, so enjoy your weekend there in Queensland.
Yeah, very good. Thanks for having us.
Every morning from 6 a.m, we bring you the latest real estate news with diverse perspectives from leading industry experts. We deliver the most property podcasts across Australia every week.
CoreLogic told us a few days ago that one of the most striking effects has been the dramatic shifts in housing values. Since March 2020, home prices have surged nationwide, rising by an astonishing 38.4%, adding roughly 227,000 to the median dwelling home. What do you reckon? Does it feel like 5 years ago to you?
I think I agree with your sentiment. It certainly doesn't feel like 5 years has passed, in that the recollection of that time is still very vivid in my mind, but it also seems like a long time ago now. So it's a little bit strange in terms of my recollection of it. But I think in WA, we had a much easier journey through COVID than some others. I'm sure some people in Victoria and other states have probably got it still very much fresh in their memory.
What are the sort of things that you should be asking? A flood event has never been discussed, at least with us. And it's probably something that people should be aware of, particularly if they're in flood zones. They should be talking to their property managers and saying, give us a little bit of guidance around what are your protocols if we have a flood event.
Yeah, that is a great point. And again, it is in the lead up. We had in our templates that to the tenants, look out at your local council for where your sandbags are. This is the number for SES. If you're experiencing this is our emergency contact. Please reach us on this number, and so on and so forth. So I think it is a great question, and it's a great point that investors could be asking managing agents that they're inquiring with.
Whether you're a seasoned investor or a first-time buyer, know your property with us on the Real Estate Podcast. We connect you to the best real estate information across Australia. The Real Estate Podcast.